Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, can hear you loud and clear. Welcome back to a holiday market.
Welcome back to At the Buzzer. Welcome to all of our buzzer beaters. This is your first time here. Welcome to At the Buzzer, our market recap. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before. Our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I am Coach Jay, been a Topstep performance coach since June of 2023, been trading for the past 13 years, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and hopefully help you become a better trader.
Thank you for that, Coach Paul. You are all our chat, our audience. Thank you for joining us each and every day that you do. We appreciate you being here. Shout out to Alex in the chat, number 1 in the chat, Dan Trader there as well, Rich, Eddie, JC, Brad. Welcome, everyone. What a day. What a day. What a day. What a weekend. Still kind of looking at whatever the hell happened last Friday, even after the close. These markets, they continue to present opportunities to us. Let's take a look at the news to start. Of course, we are still in the middle of this government shutdown. So some of the planned numbers that we are expecting, we're not getting. We do have tentative dates for CPI. The date that I saw was October 24th, which is next week. What did I just do? The date that I saw for CPI was October 24th, which was next week, Friday. Maybe we get it sooner than that, but I think we'll hear an announcement. Outside of that, planned news is pretty quiet, depending on what you consider planned news. Over the weekend, we saw on Friday, right? On Friday after the close, we saw announcement of 100% tariff on Chinese products in the U.S. That came off the back of a letter that was sent by China on rare earth materials that hasn't been refuted, right? The 100% tariff, but we did get some comments from the president saying, we are not looking to have a trade war with China. So maybe we are closer to a trade deal potentially than we initially thought. I think there was maybe a misunderstanding of what was actually in the letter from China. It didn't seem like a ban on all of the rare earth materials in that letter. So here we are. Markets initially responded to 100% tariffs and sold off. But if there is no bad news in the room, it gives the market the space potentially to rally. So we saw a pretty strong rally in the equities off of that news. Anything you got, Coach Paul, on the news?
Well, just that, as we taught, this news can come at any time again. Whether we eat some chicken tacos again or we're really going to go at it.
Right.
It makes it hard to plan a trade. So focusing on risk management is more imperative than ever. But also this Columbus Day or Indigenous Peoples Day, on lighter volume. It's a bank holiday. So one thing I do get out of this, when the stock market breaks, someone backs off. And that seems to be what's at play for news. But stay tuned. I personally don't think this is over.
Yeah. I would say so. It's probably not over because at the end of the day, we don't necessarily have a resolution for, the trade war that we've had. I think there is still that November 9th is the date as far as a deadline goes. But we will see. I don't think it is over either. With that being said, until there was this most recent what looked like a sign of an escalation, markets were making all-time highs. And are we back on that path, or does this introduce a little bit more uncertainty into the markets? We are not sure. And like Coach Paul said, the most important thing is to manage your risk, because uh, the markets are going to respond the way they do. Over the weekend, you hear a bunch, especially in the crypto market, a bunch of liquidations that were happening in the crypto market, just being over leveraged. That is just a story that is as old as time. Being too over leveraged in anything has the potential to blow out accounts, right? So hopefully, no one here watching, listening, is a part of that. But I heard Jack say it this morning on Topstep TV. If you are completely blown out on a 3% move in a market, you are way over leveraged. And, we try not to be in that position, try not to put ourselves in that position, because that is just not good risk management. At the end of the day, we got to be risk managers. Uh,
Yeah, I just reiterate that a 3% moves are going to happen.
right.
But we talk about daily loss limit that needs to be reasonable. That when these days come and you're wrong, you take a hit,
Right.
but you don't blow up.
Absolutely.
And if it goes back, it's strategy. Think of yourself you're the general planning for battles in a
Hmm.
war. You can't use all your resources in one battle, whether you win or lose. You've depleted your resources. How are you going to fight the next battle?
Right.
So I can't say it enough. Think strategically.
Yep.
Don't be in a hurry to make $50,000 this month.
Right.
That's gambling. But get your process. If you have enough capital, make $50,000 this month without taking too much risk, then you're on your way.
Yep, that is the big thing. A lot of those gains that we see, right, bigger P&L numbers, those are coming from accounts that is just a percentage of the account, right, that you're seeing, right? Sometimes you see big P&L numbers from XFAs, and shout out to the traders that do that. But we did this at the end of last year, Coach Paul. We did the yearly wrap, right, comparing what you did P&L wise to what the market did. If you see somebody making 50 grand in an XFA, what is that? That's 10x in a 150K account. That's a
Yeah.
1,000% return. And then if you look at and yes, futures are leverage products, so higher percentage returns are possible. But then you look at a bank or a hedge fund, and they're just like, oh yeah, we did a little bit better than the S&P this year, right? We were maybe right,
You're
and thus
king.
right, yeah, right. So it's all about perspective. All about perspective. Let's take a look at the quote board here. We have 36 different markets we can trade with Topstep accounts. And today, to the downside, we had the yen down 0.4%, corn down 0.61%, and micro Bitcoin futures, our biggest percentage mover to the downside, down 0.65%. Micro Bitcoin moving a lot like the equity markets. We saw that major sell off in micro Bitcoin as well, but not much of a recovery as of yet. Again, you heard about all of the crypto liquidations that were happening over the weekend, more so in meme coins, where that might be a lesson in liquidity. Trading a market that actually has decent liquidity could keep you out of a liquidation. To the upside, we had copper up 4.87%, micro Ethereum up 6.67%, and silver making a new all-time high, trading above $50. Silver up 6.87% for our biggest percentage mover to the upside. Just a real quick rundown of the top five, because the metals are having a moment right now. Silver up 6.9%, micro Ethereum up 6.69, copper up 4.85, platinum up 3.73, gold making a new all-time high up 3.24%. I think that's all of our metals, right, in the top three. And the three of the top five, actually 1, 2, 4 of the top five are our metals. That is where the trend is right now.
And and it's being exaggerated now, is the trust in fiat currencies. Just after Friday's action, to have this, I mean, and it came early and often in the metals. Well, there was a recovery in the equities, the US equities to be specific. The money's not flowing
Mm,
in the United States.
right.
It's going. We've talked about this, and we're seeing it at scale now. Um, and this trade war, this is what happens. Um, so we'll see. But if we look at the gold, we're looking at gold in dollar terms,
Right.
and it's starting to feel like what other countries felt like when a dollar gets strong. We've really never witnessed it, and it's continuing. So, and with that, inflation is still going to be front and center.
Right.
So you said that CPI and PPI are going to be released?
Just CPI is what I heard. October 24th. I'll have to take a look again to see if we're getting all the data. But the one thing I did have was CPI on the 24th.
Well, and then again, trust the numbers.
Right.
But but just going back with metals, it's we've said it's the best place to trade right now.
Really the best place to trade in all the metals. And in gold, obviously the star of 2025. But again, silver, if you're comfortable taking that risk or you want to trade some micros, has been a huge mover as well. Understand that there's risk in that, right? Big moves to the upside sometimes lead to big moves on the downside as well. So make sure you have a plan and manage your risk. To talk about our big four, we had crude oil up 1.19%. The S&P up 1.46%. We already talked about gold up 3.24%, making a new all-time high. And we have the Nasdaq up 2.1312% for the day. Pull up a Nasdaq chart. I'm going to start on a daily. Uh, what do we see? What are we seeing here, Coach Paul?
Off the cliff, bounce back in. What is that? 50%. We're right back to the. I think it was my measure was right near it.
Yeah, so 50% was right around 24,775, closed around 24,915, right above that 20 moving average, which is at 24,863.
So we not totally unexpected,
Right.
considering a lot of that what we were talking. How much 400 points, I believe, but that break was after the
After the
3 o'clock
close. Yeah.
close. So nice bounce, but let's see if it can continue underneath that 20-day moving average. We're right there, underneath the 200. Tomorrow's where the banks are open. We're going to see. Be an interesting opening tomorrow morning, but overall, to me, it's still not friendly.
Yeah. Still has a lot of work to do to get through all of the selling that we had. Shout out to who was this in the chat? Finch Trade says 618 retrace for all of our fib traders out there. You guys know I look a lot at 50%. We look a lot at 50%, but that was a 618 retracement. So if that's something that you use in your trading, use it all the time because that is exactly where the market went back to that 24,920 level there. So shout out to our fib traders. Taking a look, of course, last night, the question everybody had over the weekend was, are we going to gap up? Are we going to gap down? I think as soon as the president said, and I don't think anyone expected that we were just going to open in this range. It was either going to be a gap up or a gap down, and really no in between. When the president says, hey, you know what? Actually, it's not that big of a deal. Gap up is kind of on the table, and we held that gap. It was pretty much the low tick of the market on the open. And one of the trades, if I have any regrets on trades, is not buying 50% of this range here. I was on with Anne-Marie and for the opening call and came right back down to 50% of that candle. Actually, if we look on a 3-minute, it was it held a couple of times. I had an order down there, just never got down to my fill. I had an order down at 625, but it held pretty nicely, right? That gap candle held pretty nice, and we bounced from there. I do like what you said there, Coach Paul. I don't know if this is over because if I look at this, oops, wrong thing. I look at this 30-minute candle, which was the highest volume from Friday. We haven't traded through 50% of that.
No,
And that's the
we slowed down. And
right.
now this is a holiday, a bank holiday, so money isn't moving. If you try to get a wire today, you know what I mean.
Right.
Um, so still, technically, it was right there what you would expect. Tomorrow, to me, tomorrow on the opening is going to be really important.
Yep.
We're holding that gap. We did have the president back down, but I didn't hear him say did he say we're gonna back down off 100%?
He didn't say that. No, he didn't say that. But what he did say was that he did not want a trade war with China. He said that President Xi just had basically he said he had a moment of yeah, he said he had a moment. But that he does not want he said President Xi does not want a depression, I think he said, for his country, and neither do we in the US. It was a way of kind of backing down. He basically said, "Don't worry." Thank you, Janish.
All right. I won't worry, I guess did he say buy stocks?
Not
Like,
yet, not yet. That's the
okay.
signal that I'm looking
Let
for.
me know when.
That's the signal I'm looking for. I'm buying with everything I got. I'm buying with everything I got if he says that again. But yeah, still holding the 50% of that high volume candle. There was a question here from Billy, or just a comment. Wonder if bank holidays often result in range days in the equities. This is where your trading platform does a great job of deceiving you when it comes to how big these candles actually are. High to low range. So we had this gap, right? We opened up with about a how big was this gap? We opened up with a 1% gap, and this high to low range in the Nasdaq is 409 points. The daily ATR before Friday was 275 points. So this looked like a range day. It's a big ass range, right? This is not the range day of last week, even, right? We are talking about a 400-point range where this is where, we talked about volatility, position sizing, in a 400-point range day. That might be the time to scale down. The New York session itself was 237 points, which is normally an average day counting the overnight session in the Nasdaq. So whether it was the bank holiday that didn't really get us directional, I think there was just not, with the gap up and then the huge overnight, that first 30-minute candle last night was almost a daily ATR move, right? And if we zoom in, that's a 3-minute candle for the most part, that entire range. I think the market just had to digest what happened.
Yeah.
Right. This is a trend day that looks like a range day because we had a 1,200-point sell-off.
Well, let's just say if we take off last night's action, we just do RTH.
Friday was crazy.
Yeah. Now, interesting. I love what you put, that big volume, big candle that sits. It tells the tale.
Yep.
Is it safe? Well, I would say it's not safe yet to get. I don't think you're going to see big buyers unless we get close above that.
25,000 is that mid price right there. 25,000, which we know is just not going to be an easy level to break through. Big fat round number level. The market, anyone who's trading the market knows when we're trading there. So let's see if we back some buyers at that level. Anything else you got on the Nasdaq, Coach Paul? Do we want to check the S&P or any of the other equities?
Yeah, let's check the S&P. Although it's pretty much the same.
Very similar story here in the S&P. We take that daily range. And I think this is probably another 618 retracement. here, but very similar story here. We gap up, we hold that gap, we hold 50% of that candle. Another just again, how do we approach trading these, right? For me, I'm looking at this and I'm like, I should be buying off that 50%, right? If I can get an entry there. It holds probably a trade that you try to take with micros. If you were watching the opening call last night or market kickoff last night, I did have an order out there, just did not get tagged. But that using that 50% level or whatever fib levels you use, however you identify your levels, um, proves to continue to be a good one. Even in the overnight session, we came back down, tagged that 50% perfectly in the S&P, and bounced right back off of it. But you got to be in the game to take these trades. So really nice bounce there.
Well, you can't make money unless you risk something. So,
Right.
um, but subdued. The day was pretty subdued. Um, if we look at the 3-minute breakout,
New York session or last night?
New York session.
Oh yeah. Yep. It was a most of that price action happened in the first 3 minutes. New York session was pretty range
Yeah.
bound.
Yep. Then and that's surprising. I mean, like, I wouldn't expect much more than that, especially we were already up 100 points. But on a holiday, so no big news except for some mea culpas, if you could say, like, no, I really didn't mean that. But with that said, if you picture yourself as a money manager, you- you're just laying out at a whim of taking 3% hits.
Right.
I mean, at one point, we're getting into halfway through October. If you've had a good year, you
Yeah.
might just say, I'm kind of done
Just go straight
for a
cash the rest
while.
of the year.
I wouldn't be surprised to see a lot of that happen. Why would you risk it at, like, literally at a moment's notice?
Yeah. Yeah. If you
Um,
allocated most of your funds April, May, June,
yeah,
right? Take your
you,
take your profits.
I
Buy
mean,
gold.
like something that's in demand.
Right.
Um, but the risk factor, I mean, that's just we're gonna lay it out there, and then all of a sudden, like I said, I don't know. I would be really nervous as I'm thinking in terms of being a big um, money manager. Like, heck, T-bills might even be for the next 3 months or 2.5 months.
Right.
Don't I don't need the drama,
Exactly.
especially when they're trying to preserve the capital for bonus.
Right.
So,
Absolutely. Let's see. In the S&P, we got that high volume candle as well. We'll mark it out on the 30-minute chart. 67.20 is that price up there at 50%. Let's see if we do get back up there. But again, accepting price inside this candle. Volume did trade decently within it, but we got a lot of week left. Let's see if we actually convince some buyers because we're talking about the open interest in the S&P Friday, positive 26,000 open interest Friday, which means new shorts came into this market on the downside potentially. Uh, do they hold or do they squeeze them out? Who knows? We'll see if that was new shorts coming into the market. Anything else on the equities you got, Coach Paul? Or do you want to go over to the metals
let's go to where the action's at.
where the real action is, man? Gold, new all-time highs, 41.37 even. 41.37 even, new all-time high in gold. Let's take a look at the daily to start. What are we seeing here, Coach Paul?
Oh, perfect rally. Um, it's a rocket ship. We talked. Even on Friday, you know what was interesting? It was Friday with through all that chaos. What did gold do?
It held like a
It held.
perfect risk asset is supposed to
It's the
do.
risk asset,
Yeah.
absolutely. And that was now this started in Asia right off the bat, the rally through
Yep.
Europe and the US. It's like, what is that telling you? This market it is the place to put your money. Um, there's there's a loss of confidence, and we saw some Friday just on it how big that move was,
Yep.
and we don't see it in gold.
It held very firm.
Then that first half an hour, heck, you could almost look at the first 3-minute candle last night. It was huge. And it was funny, it wasn't even a gap.
No. What is that? What is that white line right there?
What is that white line? A time to buy.
Uh,
Um, so looking at the first 3 minutes with a huge range.
Yeah, that is insane. That's a 37-point range, about a 36.5 point range, $36.50 range in gold in 3 minutes. It's a lot of risk. That is a lot of risk right there. Especially if you're trading minis, but you could trade some gold micros. Uh, have a
Even
pretty
a
good day.
micro. And this is what's where it's starting to really understand what's going on worldwide.
Yep.
That's $360 risk on a micro.
Yeah. And I have to. Somebody did correct me the other day, and they were like, "The big contract in gold is not called the minis." So you're right. Gold, big gold, and the micros. Whoever that was that corrected me, they left a YouTube comment. Make sure I saw it.
Yeah.
Big gold and the micros. But yeah, even with the micro, Coach Paul.
But I was I had to back off. I'm like, well, that's too much risk. Now, looking at the flow, how can you get less risk? Um, buy the dip. I don't know. I'm not that good, but then this is where the anchored VWAP can really help. So that was big buying early. Basically, there wasn't selling. There was lack of follow through buying. We back under VWAP. Now, what time does Shanghai open?
I'm getting sick looking at this chart, Coach Paul. I'm getting sick looking at this chart.
Good.
I'm getting sick. Shanghai opened up at 9 p.m. Eastern time. And if you guys are wondering why I'm getting sick, shout out to Coach Dakota. He did have a short in gold last night. If you were watching slow markets, as he was getting out of that short, I was getting into a long. Who in the chat can guess the price of my long in gold? Let's see if you guys can
Drum
guess
roll,
where Jay
please.
got long. If you've been joining us for At the Buzzer for long enough, you have an idea of where that gold long was from. I had a decent trading day today. We talked about this the other day. What do you measure for, and what percentage of what you measured do you take? 40.52. My long gold was from 40.55. 40.55. And after I took that trade, we did not trade lower than my entry, not one time. 40.55 was the entry after this test of VWAP. So Coach Paul was just talking about when is that Shanghai open, right? So I missed the initial move in gold. I'm not going to complain too much about this because I normally don't trade during this time. But anything that we try to do, Coach Paul, we try to do something measured, regardless if
Mm-hmm.
it's trade war or just a normal trading day. Looking at that Shanghai open is something I can do repeatedly every day and expect something out of. This is that Shanghai open. We came right down to VWAP for this session, and the Shanghai Open VWAP never even attempted to leave the range to the downside. This is a trade chat that I got in, and as soon as I entered the trade, I said, "This market is making all-time highs." Uh, right, and I say that because I'm reviewing my own trade here. Paul and I talked about it while we were in the green room. And who is this? Janish said, "What made you get out of this trade?" Uh, Janish, I'll be honest with you guys. I took this trade from my couch on my phone. Um, I saw the profits really quick, and I just got out of the trade. Really, no excuse for not holding at least a runner to all-time highs. So Jay has to be better in this sense. Got to hold on to trades. One of the things Dakota and I talked a lot about while he was here in New York. We got to trade together, just see how each other operates, and we both said to each other, "Hey, you need to hold on to your good ones better." Um, right? And let the good ones work out, right? We let the bad ones work out, let the good ones work out. And in this case, was I expecting 4130s as a target? I wasn't, but 4100 was a reasonable target because gold was already rallying. We got the Shanghai volume. It proved that it wasn't going to sell lower. That is a trade you have to hold on to. So I'm saying this out loud. This is going to be my journal. My one-liner in my journal is going to be hold on to the good ones. Yeah, that is but the analysis is there. That's cool. You don't get these every day. Go ahead, Coach Paul.
Well, put that in your journal.
Yep.
Put it on the wall.
Yeah. Yep. Absolutely.
It's now, I don't want to beat you up because you did make money.
Absolutely. Right.
Did you make your measured money? And that's,
I think 10% of it.
yeah. Now that's I'm not putting it, that's in my, when I do mine, that's an error.
Absolutely.
So you could have an error and make money, but you can have a good trade and lose money. But his coach was saying is to follow the plan. And then we say it all the time, but it's not as easy as it sounds. But there will be more opportunities. We know that.
For sure. And Rich Layton has a comment here. You traded your plan. Did you leave money on the table? You always will. So in this case, I'm gonna say I traded half of the plan. The entry was planned very well. The target on this trade was 40.99. So, and again, I think and Coach Vince said it as well. But I think there's a part, Coach Paul, where you just said, right, that taking 10% of this trade is an error because how often do we take only 10% of a loss that we've measured, right? Normally, we're taking 100% of the loss that we've measured and only 10% of the wins that we measured. Even if the wins are bigger than the losses, you have to take 60% of this trade, in my opinion, 70% of the trade. Maybe I don't want to catch the entire thing, but I would say in this case, and reviewing my own trades, maybe I'm being a little hard on myself, but we have traders ask, how do you hold on to trades? This is one that legitimately did not have a reason to let go of. And if I'm grading myself, I need to, take 70% of this trade.
Now, this just reminds me of a story of an older trader that I knew in the green room.
Mm.
And I was doing that. I was cutting winners short.
Yeah.
He knew it. He was by me, and he looks at me. He goes, "Kid, you gotta learn to eat like an elephant and shit like a bird." And I'm like, "Wow." It was rough. I felt they insulted me, but it's true. What does that mean? You gotta let and to do that, you have to trust the process. Even on this one, if you had your original risk, you could move it to unchanged and don't look at the tick to tick movement.
Yep.
That's the one I really, from my experience, I'm telling you, if you're staring at it,
Yeah.
what's happening inside you?
I don't want to give back profits. Oh, I got a good one on. I'm up X amount of dollars already. This is a pretty quick trade. I didn't expect this. I'm just gonna, I'll take it off. I was maybe in too relaxed of a position. I had slow markets playing on the TV, and I was trading on TopstepX from my phone. Um, but it's a measured trade, and maybe part of it didn't want to give back the profits on the day. Uh, but yeah,
Yeah. Like I said, one of the things to look at is if you liked it, it's a setup, and you didn't want to lose money, you put it up to unchanged and let it go. In that case, the scratch is a win. It gives you an opportunity to eat like an elephant.
agreed. I do want to say why, and again, I'm not like Coach Paul said. I did make money on the trade, right? So I'm not going to beat myself up over it too much. But why I liked the break of all time highs is because of this double top that we had here, and then we had the Shanghai volume that came in that showed it wasn't going to take us lower, right? So at that point, this double top here is a target, and that was right under what was the prior all time high, which was 4081. Um, so from a technical perspective, okay, they're not volume is not pushing this lower. We got the pullback to VWAP and rejected pretty much right at VWAP. So from a technical perspective, yes, if this is going to go higher, this is a market that we know has been in a really strong uptrend. This type of picture before it happens shows that there is a high likelihood of taking this out. Janish in the chat asked, "What letter grade would I give this setup?" A plus. This is an A plus setup in my book because we had volume leaving the Globex opening range to the high, which tells us that we're in a trend. We had another volume event, which was that Shanghai Open failing to sell below VWAP, and we held above that low. That is a A plus trade right there. I need to reread Best Loser Wins. All right, I got the audiobook. I just finished re-listening to Trading in the Zone, so maybe I'll cue that one up next.
It's funny how those two books just keep coming back.
Right? How many times do I have to read this before I just get it? But hey, this is what we deal with every day as a trader, right? I was talking to Dakota when he was here. Like I said, he does it as well. You got a good trade on. It's just why didn't I hold that? What is the psychology that's keeping me out of holding that? When you can figure it out, you have really great trades.
Yeah, it's part of the process,
Yep.
right? It's one of the things I struggled, and I don't believe in it. I just don't. And personally, it's see money. I don't understand what it means. See money, take money. I don't. It's never worked for me.
Mm.
I think measure your risk, take measured risk for measured reward, follow your process. Sometimes, like you said, if you just there's money there and take it, then if it doesn't match the risk you took getting in, that's going to catch up.
Right.
Like I was doing when the guy told me to eat like an elephant. Because I was just cutting off trades, and he's like, "Yeah, see where that gets you over time." So now taking small profits, if that's part of your process, because you don't take, that's fine. I don't, but Coach, we talk about it, you have to follow some type of process that has an edge over time. And I deal with it. If I am on my swing trades, if I take, sometimes I'll get out, and inevitably, it's like, what the hell?
Yeah. Yeah.
You know,
I do have to be honest with myself. I don't know that there was a way that I was taking the full position to that take profit, but at least 40% of the position. There's usually not a case where I'm taking full profit to a full position to a full profit target. I could have managed the exits better, is what I just got out of the full position. I normally don't do. All right. Anything else on gold? We got Coach Paul. Where are we going? I know Hogue has a weekly kickoff level, weekly kickoff high at 4,200. Be there tonight.
you'll be there tonight. I don't, I don't know where it's going. I know this. I'm not going to get short.
There you go.
I'm just not, I've said it, 5,000 is the next target. I said that when we broke out of that range. I don't because here's what happens. If you think in percentages, like the higher it goes, the percentage for a $100 move, it's going to become the average true range.
Right. Right. Yeah. Great point. Yeah. Daily ATR right now is $67. At the highs of April or May, it was 82. And we remember what, February through May looked like. That was just extreme volatility all the time. This is an increasing daily ATR where the market's just going in one direction.
Yeah, and this is not mom and pop buying jewelry.
Mm,
This is
yeah.
central bank buying or countries buying because they've lost faith in the US.
Yep.
I mean, that's the bottom line. I mean, you're just, the US has a very large debt. Debt. Are they going to inflate it away? Are they, their talk of many different things you could do. Do you want to own more dollar assets? I'm that. That's what I'm okay. Gold, silver. You can't just magically get that,
Right.
um, or at least until you pull an asteroid in from outer space. That's not happening anytime soon,
There's a SpaceX launch today. Uh,
is it?
yeah.
If they pull that asteroid that has what the crazy amount of gold,
Right.
that's not happening. At least not to mine. So I have this gold looks. I mean, what's going to change it? That's what you ask yourself. What's going to change this?
Yep.
All right.
I don't know. I don't know. We do have. It's not necessarily a J trade because normally that's a reversal, but we closed above that high volume candle. Again, this was the highest volume candle in for the year in gold. We closed above it. We talked about this one maybe being important. We held the low. Today's range started right at 50% of it, and we closed above it. Uh, and we get much higher. And we get much higher. All right, let's take a look now at crude oil. Let's take a look at crude on the daily. What are you seeing here in crude oil?
The inside candle after yesterday or Friday's was a 4% break.
Yep.
Um, Not much to say there. Still looks like it's going to go to where the president wants it, 55. We'll see what happens from there.
Yeah, let's
Um,
see. Go ahead.
There's really nothing much else to say. It's been a tough, well, I can't see even a tough trade, but you better have a spot in crude.
Yeah, that's important. That's
Um,
important. I feel like a lot of
yeah,
times we're just, and maybe it's the nature of the time that we're taking the opening range trades. We've seen some of the best trade location happen during the London session. We could take a look at it today. But if you're caught in the middle, it feels like it could go either way.
well, we're still under the 200. We did have a gap open. And look at the wow. And no, I just, I can't. Wow, I'm glad I didn't even look. It was like that's that's where option sellers just lap it all up
Yep.
after being terrorized on Friday. Yeah, look at that gap. It was that half hour range was what 80%, 90% of the day's range.
Right. 84 ticks, where the high to low range was 115 ticks. Uh, not a lot there. We looked above 60 a couple of times. I know the house account was in a long on the opening range. I don't know. I think we did hold on to that trade. I'm not sure exactly where JD took it off, but we looked above 60 a couple times. No volume above 60. Came right back into the range. This is under heavy sell pressure right now. Rich, you have a good one. Thanks for joining as always. Anything else on crude oil, Coach Paul?
No, but let's look at natural gas.
Let's take a look at
All right,
natural
let's-
gas. Oh, what am I doing here? Natural gas on a daily. I also want to look at some of these trending metals right now, just because they are the show. What are you seeing in natural gas here? That is a pretty indecisive candle there on a daily.
Indecisive towards the bottom of range. That market we talked last week was primed to get going, and it just failed. Failed hard. We didn't cross the 20 and the 50. Went right back to the bottom. Are we going to find some value here? I don't know. But the way the energies are acting, that's not a good sign economically. So where you see gold exploding, that's a fear trade. Where you see commodities collapsing, like the commodities, useful things,
Right.
things
Soybeans,
that are used,
oil,
they're
gas.
they're collapsing at the bottom of the range of the year, bottom of it's just not a good economic output.
Mm,
Um, Natural gas had a moment, and that's when a trend. It takes more than one day. Just collapsed. So let's watch that trend line again and see if we can close above it. But I'm just, it stands out to me that commodities are just like real commodities. Gold is a commodity, but it's useful in many ways. But
right.
these are things people use every day.
Right.
You can't, and it's the trend in all of them is pathetic. Now,
Yeah. It really is across the board. I mean, I'm gonna pull up a soybeans chart. We'll pull up a corn chart. We'll pull up what are the other commodities that we have? Soybean
wheat,
meal chart, wheat chart.
um, these are basic commodities. They're not.
It's heating over.
Now, with that said, that's U.S. centric.
Right.
But again, it doesn't bode well for strong economic times. Jesus, what was that? That was natural gas.
This is natural gas. Yeah, this is natural gas.
So,
Soybean oil doesn't look too bad. I mean, for the year, it is starting that downtrend. About 13% off that high of the year. Coach Paul, we got some questions in the chat. Natural gas seasonality. Aren't we coming into winter in the U.S.? Isn't this around the time where we start to see rallies in natural gas? If we look, here's last October, November, we were making similar patterns where it looks like we made a low in November, and then we rallied through January, February. So maybe we are coming close to that, and we are near the lower extreme of this range. But last year circumstances were maybe a little bit different as well. I don't know how much what we are seeing this year is affecting commodities this way, but that seasonality trade maybe. I think if we were talking about it last year, we were near our lows and we needed 2 months for that rally. So
one of the things, look at the basis between. You don't have November natural gas,
okay,
which is at 31. Let's say 31 even, and February natural gas. You don't have it. I do. And Feb. And it's at 39.
okay,
So that's the one to watch for a winter And that's the chart would look the same if I put it up there. It
Right,
looks the
right,
same.
right.
It's that's already in the market because of demand at that time of year. That's the seasonal play, but that just it's the chart looks exactly the same.
Got you.
But if it's going to be I don't. It's been awfully warm here in Chicago for
Yeah, it
October.
just started feeling like seasonal weather here in New York. It's like about 50 out right now, rainy, which is what you would expect. But yeah, up until this weekend, it was very warm.
Now, can that change? Sure. And that's where, but being technician, we got work to do.
Yep, absolutely. We're getting some questions here about the equities. If we want to go back here again, I do want to. Any other markets you want to talk about, Coach Paul? Because we are getting some questions about the equity.
All right. No, let's go
Edgy
back to the
Edgy
equities.
Invest asked, "You guys know why, despite the volume being so high on the Nasdaq, the delta was surprisingly small? Uncertainty. The volume was. I wouldn't say it was so high in the Nasdaq today. If we look at this volume, it was above average, but we've seen some other days that were similar in volume recently. Actually, uh, it was probably in the top 30% of volume days for the year, but it wasn't extremely high. And
It's a holiday.
it's a holiday. I think we had probably some very heavy negative delta uh, Friday um, with all of the selling that we saw. I didn't get a look at the delta numbers. Let me see if I can pull that up, but it might log me out of TopstepX X here. If you have the delta, let us know. MNQ. All right. See, yeah. Anytime I look at delta, I'm never looking at the micros.
Yeah.
It's just a derivative of a derivative of a derivative, maybe. It's so far down the line that I usually, even if I trade the micros, I'm looking at the delta from the minis. Um, I'll take a look at what the minis delta.
It was positive, but it was a bigger positive
Gotcha.
on my measurements.
Gotcha.
It
Gotcha.
actually went negative um in the first half an hour, small.
Mm,
And then later in the day it got positive, but it still it wasn't big,
yeah.
but it was positive. But I agree with you. That's this is why micros are basic a retail.
Yeah.
If you the big money is going to go to the minis. Efficiency of capital. Period. I mean, it's Sony. It's still averaging 60, 70,000 contracts in a half an hour. The mini.
Right.
So it's still the place that I get my data and I'll make decisions from the mini. I'll trade the micro, but good point there.
All right. Let's take a look. Do we get any other questions? What just came? Uh, okay. Nope. We answered that one. All right. Let's take a look at some of these trending markets. Silver is continuing to make new highs as we speak. It just made it, well, the markets are closed now, but it made a new high. Silver ending the day up 7.47%. Uh, this is a
7%.
7.47%, almost 7.5% in silver. This is a strong trending market right now, Coach Paul, as all of the other metals are. Uh, Anything you want to say about this chart? How we can just look at trending markets in general? Uh, just
Well,
crazy.
looking at just looking at the daily,
Mhm.
we're I mean, like I would talk that we could go to 75 cents here in a hurry. This is a runaway market. We had that urgency last night. Um, we rallied $2 from its open. We didn't even gap.
No, no gap. Man, look at this. Doesn't matter the market, right? Technical approach to whatever market, big volume up, holds 50%.
So I look at this and we're in a trade war,
Yeah.
and you can talk, and talk is cheap, but margin costs money.
Mhm.
Well, what I'm seeing in the metals is very concerning to me as a U.S. citizen. Like we we have a mindset in the U.S. that equities, whether it's true or not, but the mindset is the economy is what the Dow is, right? The stock market.
Right.
It's not like that in Asia. And it's just looking at this chart again, it's there's I can say back off all you wanted, or things are going to be okay. No, I look at that chart and I go right back to when I started in January of 1980.
Mm.
Gold went from $40 to $800 in a couple of years.
So we're getting some questions for you, Coach Paul, in the chat. Uh, have you ever seen a rally like this in the metals before? You just said 1980. Of course,
Mhm.
every situation is different. I think the last time we saw silver up around these prices was around 2011, if I remember what the charts look like correctly. Uh, yeah, 2011, and then 1980. What was going on then in 19? Remember why were metals rallying
Um,
this way?
we had runaway inflation. Um, we had a hostage crisis in the Middle East. Hmm. We had loss of faith in the U.S. Leadership. We had a Federal Reserve that was politicized. A
Okay.
guy named Arthur Burns that the rest of the world lost trust in, and they turned to metals. And it was I was 19 years old, so I just happened to walk into this. I was going to school part time, and this is the part time job I could find.
Mm,
And it was chaos. Now to me, that was normal because I never was involved. But the bottom line, it was this is how does this isn't going to end well.
yeah.
This is not money's not safe. Very much like this, but I came in towards the tail end. But I know the people got big companies got pummeled
Mm,
because they could the price. This is not right. Silver, especially silver. I mean, it wiped out the Hunt brothers for a while. Holy Christ! Look at that chart.
mm. This is a monthly chart, silver on TradingView, maybe a little bit skewed. This is, CFDs on silver, basically pricing in every ounce, ounce of silver in US dollars. But here we go. Here's what we're talking about: 2011, 1980, and sounding kind of similar to what we're seeing now. I think we see some people in the chat saying that as well. That's
And you know what on this one, look at the volatility or the velocity of this last move.
yeah,
So mark those high. We close above that. I'm saying, and then this one, the dollar's losing its power with an administration that doesn't really seem to care.
mm,
Um, but the gold, we were just talking, oh, it gets to 4,000. Well, it's at 41, what, 50 now? That was last week. So I feel like it's a showdown, and the showdown is happening in the metals market. Um, and it's very common, and like I said, in Asia, for wealth to go, people putting their wealth 10 to 20% of it in metals. This has been for thousands of years.
Right.
First, especially, they've had many changes in governments,
Mm.
and so paper currency changes. We've been blessed in our lifetime here in the U.S. So
To not,
yeah,
yeah.
is this a flight to safety? It sure seems like, especially with this trade, this talk. I'm not confident it's going to end well.
Mm.
I'm just not. I don't. We saw just one little blip Friday, one day, couple hours, and 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 equities losing 3%.
Right. On a rumor.
Um, so while someone might have backed off a little bit, I don't see the other side.
Doing the same.
It's almost like she is very good at this.
Yeah.
Um, if, I would suggest that read The Art of War. I see it happening right before my eyes.
Yeah.
Um, there's less talk coming out of China. Smiles. That's not good.
Yeah.
There's an old China. I spent some time in Singapore. And I, the Asian society versus American society they're just a lot less emotional. And one of those sayings is, "May you live in interesting times."
Okay.
And I'm like, "Oh, I had no
Sounds like
idea.
a good thing.
It's a good thing." Then I found out, no.
Mm.
What does that mean? We're living in interesting times. Just the fact that we're looking at this going, yeah, the interesting times, it means it's not good. It's not stable.
Right. Right.
And why is it turning? If we had the upper hand, why is all this movement happening in the metals? So that's my 2 cents. Or maybe should I say 5 cents now that copper is probably the next one?
We didn't take a look at copper prices, but why don't we? Yeah. I mean, chat, really appreciate what you say here, Coach Paul. Your wealth of knowledge. Anytime you start getting in this bag, it's for me to just step out of the way and let you cook because you have all the experience. Again, if history doesn't repeat itself, it rhymes, and we are seeing maybe very similar times. What does that mean for us as traders? Volatility. That's what we want, right? That's what we embrace as traders. Volatility across the boards. And right now, again, the metals. Why are the metals in this extreme trend? Was really how we started that question. That could explain why. Is it over? I wouldn't be the first one to call that, but is presenting opportunities for us to trade. We're over time here, Coach Paul. Just a reminder for everyone: Coach Hoop is not doing his session today. He has some things he needs to take care of. But anything you got before we go, Coach Paul?
Yeah. Again, when we talk, I'm not here to be the sky is falling, but be aware.
Clouds are
And
gray.
with that, on the other side is there's a lot of opportunities, but you have to take those. You have to trade responsibly. So plan your trade and trade your plan, and let's get at it again tomorrow.
Stuff. Thank you for that, Coach Paul. Yeah, ton of opportunity in these markets. Everyone, again, assess how good of a job you are doing at following your game plan, and then the money's going to follow. Right? If we try to trade strictly for the money and not focusing so much on the process, you might cut your trades at 10% of their profit targets. So just keep that in mind, Jay. Thank you, everyone, for joining. Get you all. As always, we could not do this show without your participation. So if you could do us a favor, hit that thumbs up button on the way out. We greatly appreciate it. Trade well, manage your risk, and we will see you all tomorrow. Bye.
Bye.